So now let's talk more about the financial markets and then this time the fixed income market. And we're going to be focusing first on the bond auction as well as other latest developments within the market. And we have Emmanuel Orji, fixed income dealer with Access Bank, to give us details about that. Thank you for joining us, Emmanuel.
Thanks for having me.
Okay, so now let's dive straight into the current what's happening currently at the fixed income market. Can you give us details about the bond auction, the latest bond auction? How are investors reacting to this latest offering by the Debt Management Office?
I think, like you said, the bond auction is currently going on, the bond auction for the month of July. They have been a little bit tweaked there, unlike the calendar that stated that the DMO will be offering just 100 billion. But the circular that came out last week showed that they reduced that offer to 80 billion, 20 billion on the 2029 bond, and 60 billion on the 2032 bond. So far, we'll be seeing some strong demand on that auction, particularly given that significant reduction in size, coming from where the DMO were offering 450 billion per month, and now they've drastically reduced that to 80 billion. Given that significant reduction, we'll begin to see some aggressive bids, seeing bids as low as 15% for the 2032 bond. Just to give a bit of context to that, at the June bond auction, that same 2032 bond closed at 17.95. So just seeing how that most significant decline that we were seeing in the fixed income market, particularly in the bond space, on the back of reduced supply by the DMO.
Okay, so now, Emmanuel, so let's move a little bit away from the bond auction and focus on the fixed income market in general. Last week we saw that the Central Bank of Nigeria's MPC, I don't know, I would call it a dovish, hawkish stance, because they've held interest rates for about 3 consecutive times this year at about 27.5%. So how is that impacting the yield environment this week?
I think for the Treasury bills market, we've seen yields remain sticky. Post the last NCB auction, we haven't seen that usual sharp decline in yields that we'd see, because it seems like markets are looking for alternatives to Treasury bills. Because at the end of the day, if you purchase 1-year Treasury bills at roughly 15.5%, the effective yield around that is 19%, and you end up seeing that some money markets instruments offered by banks and asset management are roughly at 20%. So we're beginning to see that appetite decline in the NTB space, given the fact that there's now alternative to cash than investing in Treasury bill space. So until we see that policy direction where the CBN either cuts rates or tighten the aspiring corridor, we're most likely to see some resistance around this 15% handle, given that there are now more alternatives to cash. I think for the bond space, most likely continue to see that rally. What have really driven that rally in the bond space has been the reduced supply, like I mentioned, by the DMO. But nevertheless, it's also get to a point where investors are now a bit wary of where yields are coming from. Beginning of this year, we're roughly 21%, and now we are 16% handle. That's quite a significant drop for investors. So I think when we start to see some alignment, particularly from the monetary policy side, to actually show that, okay, yes, rates, interest rate environments, because it seems that there seems to be misalignment between where the market is trading and what the CBN is doing. Like I said, the NPR is still at 27.5, while market is already trading at 15%, 16% handle. So before we see any further widening of that spread between the NPR and where market is, the CBN would have to, move market lower. But for now, market is a bit sticky at this point. But for the bond auction, for the bond market, it depends on what, like I said, what the auction prints at. That are most likely to take sentiment moving forward. But for now, for the Treasury bills market, the reaction has been muted post MPC.
I'm sure investors are really looking out for that, and the fixed income market, the equities market has actually taken the shine off the fixed income market at the moment. But we do hope that 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 shine will return to the fixed income market as we round off the month of July. Thank you so much for your time on the show.
Thank you. Thank you for having me.